All right, welcome to the weekly meeting, July 12th. You losers, welcome. Oh, hey, Sean, don't, don't take your
What
phone
do you
off
want?
mute, you darky. What does
What do you want?
what does our crypto account look like, Dot?
It's swole up a little bit.
What's a little bit, Dot?
Yep, just a little bit.
Say, what's a little bit?
Huh?
Dot, are we gonna make a million this cycle, Dot?
Oh, I mean, I don't know. I mean, we gotta see.
You
You know,
clown.
still got
It's
a little
at
ways to go.
117. Is it is it floating near a half cup?
Nah, I'm in the 300s, so we still got a little ways to
Oh,
go.
that's because you have the majority of your stuff and the other stuff.
Yeah. Well, I have a lot in. I have a decent amount in Bitcoin. I have a decent amount in Solana and
Yeah,
Sui and
Solana's,
Ethereum.
I didn't want to talk about Solana.
Yeah, so Solana has to perform.
Uh,
I think it has another 7 or 8x in it, but it has to perform for me to.
well, I know that it got the bullish OB, so I was happy to see that. But as soon as I put my money in Solana, it went straight through the floor.
Well, you should have continued to buy it, is all I can tell you. Uh, but with Trump's big, beautiful bill, uh, with the debt situation, I've read in that bill that, I guess all the babies born between 2025 and 2028 or 29, the government's gonna give them $1,000. You know, they're
Why?
gonna have to
To
put.
encourage y'all to have kids?
Yeah, so the dummies will do it. The money's being printed, which will debase your dollars and cause asset prices to explode.
Well, they have to
So,
debase the dollar anyway. If they ever want to get out from under this debt, they
well,
can't do it.
I already know that. That's been my core thesis and telling everybody that this shit is going up. But, everyone has to get there and arrive there and understand it on their own terms and in their own way. So anyway, the reason I bring it up is I see the path or the runway to get the 7 or 8x out of Solana, to get the 4 or 5x out of ETH. I see probably another 100%, out of Bitcoin. And when Jerome or his replacement lowers those rates, that's when I guess that ISM will go up, and we'll have an alt season, and all the smaller cap stuff should perform. So in
So
full disclosure, I lost my wallet, that has a lot of those altcoins in it. So,
you say you lost it. How you lose your wallet?
well, I've been moving the wallet around the different computers,
You're tired.
and I haven't really lost it, but I can't find the key to the wallet that has
Well, a
a
lot of
lot of the bullshit in it. Like I know where the Solana and the Sui and the Bitcoin and the ETH is, but all the trash that I bought along the way, I can't
yeah.
I can't find that wallet. And it's not a big deal today because all that stuff is depressed. I mean, it's probably still about, I don't know, 15 or $20,000, but all that stuff is depressed. But when and if it performs, you know, I'm I'm gonna be mad if I never find the wallet keys to that.
That's only the keys are only bull crap. That's why I write mine. I know you all say, well, don't take a picture of it, but I got to do all that because I have to keep it. I don't have a safe or something I can write it down and put it in
Well,
at this stage.
when those agencies, when Apple gets hacked or when those people get
Well,
hacked,
I get it, but I mean they notify you when they get hacked, all right?
well, you may not find out necessarily for a long time. So my point is this: if you store your pass keys in a cloud, when those clouds get hacked, and they always do, somebody's going to get your pass key and they're going to have your wallet. And it's no big deal if you don't have no money in it or very little, but if you got a lot of money in it, you're going to lose your wallet. So I
Well,
would not be I
it
would
ain't
not be doing it that way if I was anybody.
whenever I whenever this Solana. blows up, then I'll have to switch wallets. I might have to talk to him anyway, get it like a cold wallet.
You need to switch wallets now. While the money, and to me, $30,000 is still a lot of money. You need to switch wallets
It ain't
now,
30, but it was over 30 that I put in there, but it ain't 30 now because
even if it's 20,
it's
even if
depressed.
it's 50, even if it's 15. It's still a lot of money, and I wouldn't wait for somebody to hack my shit because I get text message all the time.
Uh,
Because I have a Coinbase account, and it has a password and it has two-factor authentication on it.
mhm.
And I get text messages all the time giving me, the code. So that means somebody must have the password to my Coinbase account.
Trying to get
How'd
in.
they get it, you ask? Because, rushing on the computer, saving the shit on the computer through that Google key shit or whatever it is. I don't understand how it all works. But point is, you save the password on a cloud. The only thing that's been saving me is I have that
In
two-factor
fact,
authentication. So I would not be saving my passwords on a cloud.
yeah, that sounds good. Shut up, TT. All right. I think the point of the conversation is everybody has you got a little time to add to your crypto bag before we hit that banana zone.
You got a little bit of time. I mean, it ain't a lot, and really, Ethereum is probably the play, to be honest.
It's probably what?
It's probably the play.
Well, maybe I like Solana. Ethereum is like $2,000. I know that it's supposed to get more energy this cycle.
Well, I mean, they're pumping it up on CNBC. I mean, that's the blockchain of choice for Wall Street. So
Yeah, so maybe.
Wall Street, ETH is probably going to have a structural bid for the foreseeable future. So who knows where the top is? I mean, you probably gonna get an $8,000 or $10,000 ETH this cycle, uh, and then whatever the crash looks like. But if Wall Street is gonna be building their shit on top of ETH is gonna have a structural bid. Um, this is how, like Watu. I don't know if I said it in this forum, but I know when me and you have had our own conversations, and you probably heard the guy on YouTube say that the space is going from $2 trillion to $100 trillion.
Hmm.
This is how it happens. Wall Street building on Ethereum, BlackRock pumping Bitcoin, those ETFs. This is how it happens. Them authorizing Solana ETFs. This is how the space goes from 2 trillion to 100 trillion.
I'm with you. I have my little bet is on Solana.
I'm not just talking to you, Watu.
Oh,
I'm
I feel you.
talking to the group.
I'm
So
with
what I'm
Brian Paul.
saying is, don't wait until the space is worth $80 trillion
Hey, group.
and you feel like it's safe to get in.
I think you're talking above a lot of people's head. I, what you should say is this is today is the equivalent, of being in 1898 or 1900 when you can place your 1 penny or your 3 pennies on Coca-Cola stock. You know,
I
uh,
like to think of it as the equivalent of being in the 1980s and buying Microsoft.
with that
I
too.
like to think of it as the equivalent of being, in
2000
2000 and buying Amazon or
by
Google
Amazon.
or Apple. You know what I mean? That's what it is.
Well, I
They
agree.
are they're taking the financial system that the world runs on, and they are
Uh-huh.
putting it on blockchain rails. So you must invest in layer one blockchain, Solana, Ethereum, SUI. Bitcoin is digital gold. Yes, it's $117,000 today, but as long as they print money, Bitcoin has no top.
What do
It
you
only has a top if they decide to stop printing money. So you're going to have $1 million Bitcoin. You're going to have a $5 million Bitcoin, so get in where you fit in, fool.
what
Don't
do you
be a
think about
markup at
XRP?
the high school. But anyway, that's all I got, man.
Good morning. What do you think about XRP?
Ah, I don't like it. And I really need to look at the chart. But I think all of it's going to go up because rising tides are going to lift all boats, even the shitty ones. But I don't, XRP is not one of my favorites. It doesn't mean it's not going to perform, though, is what I would say.
So you guys would suggest sticking with Ethereum and Solana. I don't know a lot about like crypto. That's what I'm asking.
That's a bad
Uh,
excuse. I
I
so
think,
Okay, I'm sorry. I should learn. I should educate
No, well,
myself.
listen, this is for everybody, not just you, Naim, but all we none of us knew anything about trading or reading the chart. Um, the bottom line is crypto is the future. It's kind of like somebody telling you, I don't understand money, and they're 18 or 19. Well, bro, you might need to understand it because you're going to have to earn it and use it, through the rest of your life. I really think that we all have to. I'm dumb about crypto too. I don't know crypto like my brother knows crypto. Um, but I have to take time to watch a YouTube video or two between my trading videos, uh, you know, so people can break it down. And the truth is, you don't have to be an expert at it. You just have to have some understanding of what crypto is. Like uh it's the internet, it's the new internet, right? But you have to kind of have a baseline understanding of what it is and how you might be able to take advantage of a piece of it, right? You don't have to have, like my brother, like 25 different coins, where he's swinging for the fences on one of these little coins, uh that might rise, fast. You could just be a basic a level crypto person who just accumulates crypto like you would in your savings account, because your dollars are going to be worth nothing. They're devaluing your dollar. So instead of putting $1 in your savings account, or $200 in your savings account, you just buy $200 of crypto. It could just be one coin. It could be Bitcoin. It could be Ethereum. Just put your $200 there instead of holding it in real money. That's all we're kind of saying.
So I have another question. Uh, how, I guess, hold on, I just lost me. It just went from me. Give me 1 second. Uh, as far as like startup coins, right? Where would I go to find out where the startup coins are at?
so you
Because I would,
you
oh, go
have
ahead,
to
sorry.
they have you have centralized exchanges like crypto.com, like Coinbase. Okay. The centralized exchanges are going to have your bigger coins. And when I say bigger coins, I'm talking about their market capitalization. You know, um, they also have these things out there called DEXs, decentralized exchanges. That's where you can buy a lot of your smaller, more high risk coins where you can, potentially get, your 100x's, your 1000x's, Um, so you have to you have to have an account, or you should have an account. I guess you don't have to have one. Um, but you need to have a crypto wallet that you
I
can
have a
hold.
Coinbase wallet. I was just
Right.
asking, like, I
Well,
wanted to
hold
know
on,
what,
hold on,
huh?
hold on. I'm explaining it to you. So you have a Coinbase wallet, that's fine. That wallet will work. So now you just have to go to. In fact, I can just walk everybody through it. If we share the screen, I mean, for people that's interested in it, maybe after we do this trading bullshit, I can just kind of walk you through it, and that way you see it firsthand. And,
Hey,
and,
Todd,
and
you can do it now.
okay.
You know,
All right.
just I'm not gonna say hurry up, but just don't
Well,
get.
I mean,
don't.
if you're on a time
No, I'm not. I'm just
crunch,
saying, don't get a just if you can stick to the script.
well, you can stick to the script. What's the script?
Showing everybody how to access uh the Dexes
Okay, I
in the
will.
white pages.
Okay.
Because
Um,
they're not gonna even know what a white page is.
okay. Um,
Do you think it's profitable to invest in a decentralized coin, seeing that there's, it doesn't cost as much and it could like blow up like Bitcoin in maybe in the next 10 years?
well, what I would tell you is this, back in 2020, somebody told me about this coin called Dogecoin. And I put $500 in it in like July or August of 2020. And every now and then I'd peek in on the coin, and it was my 500 was 510, 500, 510, 500. Eventually I lost interest in the coin. Uh, One day, probably January time frame of 2021, one of my Facebook friends had posted this Robinhood line chart, and I saw a big spike in it. I didn't know what it was. I was at work, but when I went home, I looked at the chart and I zoomed in on it and I saw that it was Doge. So still, I'm not really thinking anything of it. So I peek at my Dogecoin. My 500 bucks is 5,000 bucks. And I'm like, damn,
Wow.
So, but I didn't feel a big urge to sell it. You know what I mean? Um, so long story short, I left it in there, and time goes on into April and May, and that 500 bucks, ultimately the highest I saw it was 120,000. So hey, hell yeah, you can make a lot of money on it. Every coin isn't going to do that. I'll probably never get that lucky again, to be honest. But even if you don't get a million X like I did off of Dogecoin, if you can get a 10X, a 5X, a 10X. Like I was just telling my brother, like right now I have, I don't know, 300 and something $1,000 in crypto. I just need a 3X and I'm at a million. I don't need a million X to get to a million. So the point is, yes, you can make a lot of money, but you have to buy the coins when their market cap is small. You can't realistically expect to buy, I don't know, a coin with a 5, $10 billion market cap. You can't expect to make 100X on that coin. It's already a pretty big company or project. So you want a 10 million market cap coin, a 5 million market cap coin,
I
something like.
but I also Naeem, I think that's a bad way to look at it.
Well, we're talking about the explosive games. I'm not
I,
recommending that
I know,
people,
but
dumpster dive like that. But she's asked the question, I answered the question.
I know that's why I was
So
just telling
that's why
her.
I talked about 10Xs. 10Xs are a lot more reasonable than 100Xs or 1000Xs. A 10X, you just need, a $500,000 market, or a few 100,000, even $1 billion market cap. Sometimes if something is $1 billion market cap, it can go to 10 billion. That's a 10X.
Well, exactly. I think Solana's in a spot where you can 10X. It's only
it,
$150.
it can, and if you would
Yeah,
have bought Solana at $8 or $10 or $20, you would already have your
of
10X.
course. Of course.
So all I'm saying is you got to think of crypto on a risk curve. The bigger market cap stuff is less risk but less upside. The mid-range stuff is a little more risk, but a little more upside. And when you dumpster dive $5 million, $10 million, very high risk, and it could go to zero. So the way I like to do it is if I have 100% of my money, maybe I want to put 80% or 90% of that money in big stuff like Bitcoin, ETH, Solana, you know, and then I take 5% and put it in mid caps, and then maybe 2% in where I go dumpster diving.
But
That
pancake.
way, if the dumpster diving doesn't work out and all that stuff goes to zero, you still, the portfolio still trucks on, still you don't lose all your money. But everybody has to figure out what their risk tolerance is as far as the percentage of their portfolio. All that becomes a personal choice. You know, you might be only comfortable doing 2% dumpster diving. The next man might want to do 20 or 30. So anyway,
Are there educators that you guys suggest? Because there's a lot of stuff on YouTube and there's a lot of
Give it a South
information.
African dude.
yeah, there's plenty of educators out there. I follow mainly macro educators. I'm not I don't really like trading. I don't really give a shit too much about trading. I like to look at longer term charts because all investing is long term trading. Um, so what I like to do for what works for me is I show up in this class, I learn how to read charts, but I mainly use the monthly charts, the weekly charts, charts like that. And when they get to certain areas, I like to buy crypto or stocks, and hold them for the longer term. So the chart reading is great because you know how to read a chart, you know when to enter, you know when you probably shouldn't enter. Understanding macro allows you to understand how the real world is pushing and manipulating that chart. That's why take for example, in April 7th, Liberation Day, when the market crashed, that's why I was fairly sure that it was just a dip, a retrace, a retest, because I understand macro, and macro says that we have to go higher, and we have to go higher because we're $37 trillion in debt. But if you don't understand macro, maybe you don't understand why we have to go higher. We have to expand. We have to. And people running things know we have to. So if you remember back when Trump was president the first time, we had COVID. And if you pull up that chart, you have a neat 80% retracement from whatever the local top was. And then we take off and went to Valhalla. So now he's back in there. You have a neat pullback again, a resetting of the market. And my guess is we go back to Valhalla. So, but if you have no understanding of the bigger picture of the macro environment, then maybe you don't
Uh,
understand that we got to go higher and why we have to go higher.
so
What?
what is Valhalla?
I don't know. It be in them Viking movies. That's where they all want to go. I think it's their version of heaven. So
Yeah, man. But that's what I'm saying. Like I guarantee you, maybe me and you got the reference, or one other person might, but that's what I'm
y'all
talking
don't know what Valhalla is, man.
about.
Y'all, wow. But anyway, hey, if I say stuff and you don't understand, please ask me to explain myself. I don't have a problem with that. There's no dumb questions, especially when we're talking about markets and money. Everybody has to learn somewhere. I didn't come out of my mother's womb knowing what I know now. Hell, I didn't know this stuff most of my life. I didn't start learning it really until I got my 40s. So you guys that are a lot younger than I am, uh, if y'all don't understand something, please ask because the earlier in your lives that you know this stuff, the better off your lives are going to be moving forward. But I guess we can move on to, this crypto stuff. Oh, so is that TiPad or TPad? Sorry if I'm mispronouncing your name. Oh, TiPad, I guess.
T.I. is in here.
Yeah, he know what Valhalla is, so it's all good. But so do I have control of the screen or what?
Yeah, all you got to do is click share screen top.
Okay, let me make sure I don't have no like porn or that have any embarrassing moments. So Okay, let me see. All right. Okay, so can y'all see my screen?
Yes.
Okay. So you asked about XRP a while ago, and hold on while I'm trying to move some things around. Okay. So this is a monthly chart of XRP. And while I don't like XRP, this suggests to me that it's going higher. So if you want to buy that, if you want to trade it or whatever, I mean, you're probably going to make money. This fib extension right here, if we're pretty conservative, this suggests that XRP is going to go to at least $8.30. It's probably going to go to the top of this scale or somewhere in this range right here, which would put us, between $10 and $12. So if I'm reading this chart and meshing it with what I think is going on in the macro environment, yeah, I think XRP is going to go up. Any other questions about XRP? Okay, so
No,
we'll
I'm
move
just gonna go and look at the chart myself.
on.
But so are you expecting it to hit that imbalance right there and then
Right here,
buy?
you mean
Yeah.
the lower imbalance? It's
Yes,
possible. We're
sir.
in the summertime. So what we usually get in the summertime is chop solidation. So it may come back down there. I mean, I can't guarantee it, as a longer term investor, I wouldn't care anyway if it came back down there. I have some XRP that I've held for years, and it's pretty much not done shit. I call it a stable coin. So I'm not interested probably in putting new money in XRP, but I have some XRP. And I guess maybe if we come back down to fill that imbalance, maybe I mean, that's a pretty low imbalance. Um,
That's low. I'm sorry. Maybe I guess coins move really slowly. Mm.
well, XRP moves slowly. And what I'm saying is XRP hasn't been $1.21 in a long time. If we come all the way down here, we're below $1. So I don't think it's coming down there, but I don't know. I don't know what kind of economic surprises might be on the horizon because I see your president talking about slapping people with tariffs again. So, you know, I don't know, but whatever dip we might get, I'm buying that bitch. So, that's just my personal opinion. But longer term,
I've
this
never,
go ahead.
sorry. I'm sorry.
No,
I
go ahead.
apologize. Go ahead. Okay, so do you just add like your stock? Do you add like a stock screener on what you call it again? On TradingView so you can get the real time data?
No, I
Is
don't.
that
I don't have a stock screener. I don't know what version of this I pay for, but whatever I pay for gives me real time data. Well, too, maybe you can help me out. I mean, what am I? You're the one that told me about this trading view.
I don't know what subscription you have, but maybe it's just the first paid for version. I don't know.
What do you have?
I got the top version.
Okay, I probably don't have the top version. I probably have whatever the first tiered layer is, like you said, that you pay for. I just know my data is like real time.
okay? Okay, thanks.
All right. All right. So moving right along. The hell is this? Okay, a while ago I was talking about market caps to kind of give you an idea of how big your coin is, or how risky your coin might be. So this is coinmarketcap.com. And if you look right here where I'm circling, that market cap is the market cap, it's the worth of the overall crypto space. Bitcoin, ETH, every coin all together, everything's worth 3.65 trillion dollars. So a while ago, when I was saying the space is going from $2 trillion to $100 trillion, This is what I'm talking about. So don't wait for this number to read 75 trillion, 80, 90 trillion before you decide crypto is safe enough for you to get into. You know, if you get in early, how long before you're a millionaire? 10 trillion, 15 trillion. So my larger point concerning this overall market cap is don't wait until the space is mature, to get in. You make your money by being in the punch bowl first, and then when they come and pour their money into it, rising tides lift all boats, even the shitty ones. And if you're in a shitty boat, you're gonna get lifted. So okay, so you scroll down here, see I got Bitcoin first, market cap. Bitcoin is worth $2.3 trillion. That's the market cap of Bitcoin. So when I talk about market caps, the bigger this number, the less risky that coin is. So the smaller this number, the more risky that coin is. If you want to be safe with crypto, you just buy the big layer ones. And that's going to be Bitcoin, Ethereum. XRP is a big layer one, but it's, I don't have faith in it. BNB is another one. Solana down here. I don't like Cardano, but they got an army. A lot of people like Cardano. Sui's another big layer one. Chainlink is gonna, I think, blow up because Chainlink is an oracle. So if Wall Street is gonna use Ethereum, Chainlink is gonna be huge in providing price data, for the market. So I think Chainlink should do well. We can look at their chart too. Avalanche is another one. So anyway, CoinMarketCap has just about all the coins. So the way you know what kind of coin you're dealing with is, God dang, let me see. Let's just have you guys heard of Fartcoin? Probably not. But anyway, Fartcoin is a meme coin. Let's say you wanted to buy a Fartcoin, but you don't know what blockchain it's on. Think of a blockchain like a street, and think of the different smaller apps and projects as buildings and or houses on that street. So Ethereum is a layer one blockchain. Solana is a layer one blockchain. Bitcoin is a layer one blockchain. BNB is a layer one blockchain. Think of all those as streets. And then a lot of your smaller projects are going to be built on BNB Street or Ethereum Street or Solana Street, built on top of those layer one blockchains. So Fartcoin is built on the Solana blockchain. And the way you know that, God dang it, is, and you can do this for any coin. You come here, you search the coin, and if you come over here, this tells you how big the coin is. Fartcoin has a $1.2 billion market cap. Fully diluted, it's $1.2 billion. So let me talk about fully diluted. So sometimes there will be a gap between this number and the FDV number. Ideally, when you buy these coins, you don't want a big gap between these two numbers, because what that means is fully diluted. The fully diluted value represents all of the coins that have been created. The market cap value represents all of the coins that are currently trading. So the gap between those two usually represents locked up coins, meaning if I was a venture capitalist, they may have sold me a bunch of fart coins at 2 cents a coin when they built the project. But I'm not allowed to sell those coins for X amount of time. So if I bought Fartcoin at 2 cents a coin, I'm up, I don't know, call it 100x at 121. But my coins are locked. So as soon as that calendar date hits, I'm probably going to dump my coins on the market because I'm up 100x. So when there's a big gap between these two, you always got to be aware of the fact that people might be raining down coins on top of your head, because you got in today or last week, but they got in last year or 2 years ago or whatever the case may be. You're down 2%, they're up 100x, and they're raining down on you, pushing the price of the coin down, and you're wondering why the shit ain't performing.
I
Does
have a
everybody
question.
understand?
So what, sorry, I didn't mean to interrupt. Go ahead.
Nah, go ahead.
So what would be considered a big gap? I don't know. Like what
Uh,
percentage?
to me, I would say anything like I like for like 80% of the coins to be on the market already. So to me, anything more than 80%, you know, like let's for round numbers sake, let's say the fully diluted value of Fartcoin was $1 billion. Um, I would want half a billion, I would probably want 800 million coins trading on the market and 200 million locked up, you know. But that number slides a little bit depending on who you talk to. But I wouldn't want 500 billion coins locked or 500 million coins locked up and it's a 1 billion FDV coin because if that's the case, then I got to go look at the token release schedule to make sure that I'm not going to potentially get tokens rained down on me. Because sometimes the next release isn't for, I don't know, a year. And if that's the case, then okay, maybe you take a chance because you know that the supply is fixed for maybe the window of time that you want to trade or invest. But if you know nothing, then just always be aware of the ratio here because you could be buying something that's going to be suppressed because of incessant selling.
I mean, the only way I can even justify that, I would think, is maybe you think that we're going to hit a bull cycle or whatever.
Well,
And
that's exactly right, and that's what I mean, though. If if you think we're going into an upcycle, like for example, we looked at that XRP chart. The chart looks to me like it's printed a flag, and we're going to go higher. So if I know we're going into an upcycle, then maybe I worry a little less about the FDV. But if I don't know, like most people in here, I don't think know because they don't know macro, then if there's a big gap between what the market cap and the fully diluted market cap, do you know when those tokens are scheduled to be released? Do you know that liquidity is being pushed into the market and rising tide is going to lift all boats? If you don't know that stuff, to me, you're playing a little bit more Russian roulette. So, any other questions about fully diluted value?
Well, no, but are you going to be sharing with us, like, I guess maybe the individuals that you follow? I
Yeah,
just would
yeah,
like to study
yeah,
further.
yeah. I'm gonna do that. So, and if I get to the end of this thing and I haven't done it, just interrupt me and remind me. I mean, I'm not gonna get mad about it. Uh, okay. So I told you a while ago that Fartcoin was built on the Solana blockchain. And the reason I know that is because I can come here. You see where it says wallets? What's telling you if you hit the drop down, the different wallets that'll support this coin that you can store this coin in. And this right here is telling you that it's Solana blockchain. Sometimes there will be a bunch of different names here, Ethereum, Solana, whatever. And what that basically means is this coin is compatible on all those different blockchains. But in this particular case, Fartcoin is only compatible on the Solana blockchain. Does everyone understand that?
Does that make it less valuable?
Huh?
Does that make it less valuable?
No, it doesn't make it less valuable. The point of that is so you don't buy Fartcoin and then send it to your Ethereum wallet and your coins disappear into the ether space or whatever. You know what I mean?
Yeah, I do. I don't think it. I don't think most people know, but yeah, I do. What about
Right. So,
can you
huh? What you say?
can you wrap these coins?
Um, no, you can't. You can't wrap these coins. And wrap technology. I mean, that's old shit. You know, most of the space is moving away from wrapping coins. So, you'll still run into that, from time to time, but most of the time, you're going to see less and less wrapped coins. And the whole point of wrapping coins was because you had coins built on different technology, and you wrapped them so you could move them onto different blockchains. So, okay, so I explained how you know what blockchains the coins are compatible with. We talked about FDV. We talked about market caps. Um, so I guess the next thing is just to talk about who I follow. So I like Arthur Hayes. He's the founder of BitMEX, which is a perpetual DEX, that allowed you to use a shit ton of leverage trading crypto back in the day. The dude is a millionaire now, or billionaire now. He knows macro. He knows his shit. You know, he's very rarely wrong. So if Arthur's saying the shit, or if Arthur writes some shit, I pay attention. Uh, there's another guy named Raoul Pal. He's a British dude, knows his fucking shit. Usually not wrong. Uh, there's another guy named Michael Howe. He's a little less visible, but when it comes to global liquidity, he knows his shit. And those are the three guys I mainly follow for macro. It taught me a lot. That's why I've become the genius that I am today.
Hey, do y'all know what macro is? It's okay.
No,
Okay,
no,
I didn't
No.
think so. I didn't think so.
the bigger scale,
Can,
macro.
can you explain
Okay.
something?
So macroeconomics, it's big picture economics, world economics, maybe country level economics. And basically macro, like when gold is going up and nobody knows why. When the markets are going up, oil's going down, nobody knows why. Macroeconomics is a zoomed out, big picture understanding or study of economics. So basically, when the world governments print money and when I say print money, I'm using it kind of in an all-inclusive way. And what I mean by that is sometimes they literally print money, but other times they manipulate the dollar down, or they, like what they just did or what they're doing with the banks. There's something called the supplemental leverage ratio. And what that basically means is for all the investments, and I'll just leave it at the term investments. For all the investments that the banks have on their balance sheet, or liabilities that they may have on their balance sheet, they have to have X amount of dollars or capital on their balance sheet in the event that those investments go south, you know, so the bank doesn't go under. There's a ratio of assets to liabilities the banks have to have. Well, what the Trump administration is doing is they're going to make that ratio less restrictive.
Mm-hmm.
So when they do that, that frees up extra capital for the banks to run out there and buy more risky shit, you know, basically. So all of that promotes economic activity. You know, global liquidity is the expansion of M2 money supply and the encouragement or facilitation of all things credit and or economic activity. So when liquidity increases, markets go up. So but what they like to do is they like to give you these bullshit narratives about why the market's going up or why the dollar's going down. You know, they give these bullshit narratives. You know, the latest one is BRICS. Oh, they're moving away from the dollar, so the dollar's going down. No, bitches. The dollar's going down because it's time for the market to expand because we got $37 trillion worth of debt. The dollar has to go down. It has to. The markets have to go up. They have to. It's not a question. They have to go up.
Why do they have to go up?
They have to go up. And the best way I can attempt to explain it is this. And think of it like in your house. For those of you that rent an apartment or own a house, you pay a mortgage, you pay rent, you pay for your car, you have your liabilities that you pay for, and you have your job or whatever means that you make money with, okay? So there must be a relationship between your paycheck and your financial obligations. If your liabilities keep ticking up, the question I would ask you is if you're increasing your debt, and let's just use credit card debt, but it can be any kind of debt. If you're increasing that debt at 2% a year, is your paycheck increasing at 2% a year? Because if it's not, you're going to have a problem. So ideally, you want your paycheck to increase at a higher rate, percentage rate, than your liabilities do. When that doesn't happen, eventually, you have a mountain of debt. And with debt, there's always an interest rate attached to it. So if your pay doesn't maintain pace with the debt, then eventually you get to a point where you're just barely making the interest payments. You're being crushed by the debt. So it's the same thing with the country. They fight wars, they print money for COVID, they print money and give it to rich people, they print money for whatever reasons they print it for. That's the $37 trillion of debt that the country's in. But the country only takes in, I don't know, $4.5 or $5 trillion in tax receipts every year. So if you're cutting taxes like they just did, that $4.5 or $5 trillion is likely going to go down. But they keep borrowing money. So are the tax receipts increasing at the same rate or at a higher rate than the rate that they're accumulating debt? The answer is no. Really, the tax receipts should increase at a higher rate than the rate that they accumulate debt. They're not. So as long as that's the case, then if you think of the stock markets as the collateral to that debt, then you know if that debt is growing at, say, 6 or 7% a year, then the stock market has to do the same fucking thing, right? Just like your paycheck. If you're accumulating credit card debt in your house at whatever percent a year, your paycheck should grow at that same percent. If not, we're going to have a problem. Eventually, you get to a point to where you max out that credit card. And then what happens? You need to go back to the bank and ask for an extension of your credit. You need more space on that credit card, or you got to go get another credit card. The point here is you need more space. So the way that what?
Hey, I laugh because I, I'm thinking to myself, but the majority of this audience is black. There might be a different alternative that they grew up with, where they just instead of going to the bank asking for it, they just stop answering the phone.
Well, whatever. I mean, the point here is, I'm trying to draw this analogy so
Yeah,
people
I
understand.
know. I just laugh.
Okay, so when you have too much debt, you need the roll. You need the roll first. You need the space first. Yeah, I care about the interest rate because I want to be able to pay it. But if I've lost my job and I'm sitting in this house and my mortgage is due, my electricity bill is due, and my credit card that I normally pay it with is maxed out, I need the role first. I need the space first, or I need a job so I can pay this bill. What if I can't get a job and I got to go to my brother and say, "Hey man, I need $300 to pay this light bill." He's like, "Yeah, I'll loan you the money, but I'm gonna loan it to you at 30%." I don't like those terms, but I need the role. I need the money. I need the money first if I'm prioritizing, right? So the country's the same way. So we need the role first, which is why, and I hope I don't lose people, but if you remember at the bottom of the market, the last bear market in 2022, we formed that bottom and then the market turned around and started going up. But Jerome Powell hadn't lowered rates yet. It's because they started stealth pushing uh, liquidity into the system. They were giving the system the role at those high rates, which is why Janet Yellen went and funded those bills at the short end of the curve, because interest rates were high. She didn't want to lock in them high ass rates at 20 and 30 years. So she did it all on the front end of the curve where they would expire and need to be refinanced in 2 years. But anyway, the larger point, so I don't get off track here, is when you are overly indebted, your priorities switch. Normally interest rates drive everything. They're the number one factor when it comes to economic activity and market performance. But when you enter into something that they call fiscal dominance, meaning you have too much debt.
But I think we talked about fiscal dominance last week. Y'all remember?
They don't. But when you enter into a period of time or a place where fiscal dominance is the key element or key factor that dictates everything, then credit space becomes more important. Liquidity takes over from interest rates, which is why basically if you look at the markets and you go back to 2022, you'll see that they've gone up. But if you go out to Main Street, you got everybody whining about the price of eggs and basically bitching and whining about how hard it is, because interest rates, Main Street depends on interest rates, because Main Street small business usually has to borrow money so they can turn a profit in their business and so they can hire people and make payroll. But if interest rates are high, then they can't afford to borrow money. So Main Street suffers as the markets drift higher. That's why you have Main Street economy and Wall Street economy, because liquidity gets pushed in to support those markets because the markets are the collateral to that debt. So anyway, let me pull up another chart to try to explain this. And I'm going to use the S&P because it represents most of the stock market, but you can see it on the NASDAQ and probably the Dow Jones too. So I think it's SPX. And maybe I need to go to funds over here or indices. Okay, this is the monthly chart. Okay. So if you look right here, call it January 2022, which was the top of the last bull market. Jerome Powell raised rates, market crashes. And if you come in here, August 22, September 22, October 22, that's the bottom of the market. And now the market takes off because Janet Yellen is pushing liquidity into the system. The market takes off and it comes back up here near all-time highs. Okay. So when I talk about the economic cycle and the debt, if the debt has increased and there's a ratio between the debt and the collateral, which is the market, if the debt is increased, this goddamn market has to increase. This market can't fall down. It can't. Or the whole world is in a whole shitload of trouble. It literally can't. So when I hear all the fear and trepidation, like the other day I saw where my brother sent y'all a message on WhatsApp, I think, or maybe it was in a Discord, I don't know, where he was talking about the divergence between the Dow and the S&P and the NASDAQ. And he, in short, he said the market was going to crash. I didn't respond, but I didn't think it was going to crash because of what I'm telling you now. It can't. We can have pullbacks, but it can't. If they really allow the markets to behave, if we really lived in a true free market society, all this shit would crash down and burn and wash out all the bullshit. But you got a demographics problem in this country, really all over the world, where you got too many old people. So, and what that means is, y'all should write this down because this is where it all starts. GDP, there's an equation. What it means is population trend rate growth plus productivity trend rate growth plus debt trend rate growth equals GDP. And in plain English, what that means is if you're having babies at a high rate, you're going to have a bunch of people. If you got a bunch of people, then your productivity should be high. And then if your productivity is high, then in theory, you got a bunch of tax receipts. And if you're responsible with your debt, basically you don't want your debt growth rate to outpace your tax receipt or your paycheck growth rate. So if you look at the United States, China, Japan, Europe, basically the whole world, except for places maybe like India, I think Brazil is another place. But if you look at
Africa.
Okay, well, Africa, most of the world, definitely the developed world, birth rates are down. So if birth rates are down, then productivity is going to be down. But debt growth rate is not down. And in part, it's not down because as your population gets old, they're on Social Security, they're on Medicare, they're on whatever. Basically, the state is putting out money to pay for these people to live because they're retired now. So that's in part why your debt grows. Then the other is wars and whatever other goodies that they sneak into these bills, basically to fund themselves. I'm talking about the politicians, people in power. So all this whining about illegal immigration, et cetera, where, Trump and his people have told y'all that, immigrants are the problem. It's all bullshit, man. The problem is demographics. You don't have enough people and you got more old people. And all you got to do is look back and think about it. If you go back to when the baby boomers were young after World War II and everybody came back and fucked and had all them baby boomers, look at what the economy was doing. It was better. But now all those people are old, and Gen X didn't have a bunch of kids, and millennials didn't, and nobody's having a bunch of kids. So productivity's down, and the growth rate of debt outpaces the country's paycheck. So, and as long as that's the case, their way out of it is to print money, monetize the debt. When they do that, though, it debases your dollars or your euros or your whatever money you use. So that's why my dad could buy a house for $73,000. But when it came time for me to buy one, I had to pay $300,000. And when it comes time for my nieces and nephews to buy one, they probably gonna pay $500,000 or $600,000. That's why my dad could buy gas when he was young, probably 30 cents a gallon. You know, when we were young kids, me and my brother, you know, it was 89 cents, 99 cents a gallon. When I was a younger dude in my 30s, I remember it going to like $2 and me losing my mind. Now it's $4. The gas is the same gas. The houses are the same wood, the same concrete, the same materials. Why does it cost more? Because they are debasing the currency. They are monetizing the debt because of that GDP equation I just gave. But you know what's not getting fucked over? Real assets aren't. And I will use Bitcoin as an example. I bought 2 Bitcoins back in 2018. They cost me $3,000 a piece. I foolishly sold one along the way because I didn't know then what I know now. But if I wanted to buy $100,000 house, car, whatever, back in 2018, it would have cost me 30 something Bitcoins to do it. If I want to buy $100,000 something now, it'll cost me less than 1 Bitcoin to do it. Things depreciate when you measure them in real assets. They appreciate when you measure them in fiat currencies, dollar, euro, whatever your shitty currency is in whatever country you live in. It's all shit. And it will cost you more of those pieces of paper over time to buy stuff because all of that stuff is being debased. And if you put your money in real stuff, and I use Bitcoin as an example because that is the premier asset, in my opinion, in the world, everything gets cheaper. And the sooner that people understand that and pay attention and stop living for tomorrow or next week, the better off you'll be. You will put your money in Bitcoin and you will consistently put your money in Bitcoin or other digital assets, you know, and over time you will see that your life gets cheaper as opposed to more expensive. 1 Bitcoin is 1 Bitcoin. What does that mean, Sean? What it means is basically what I just described. 1 Bitcoin is 1 Bitcoin. $1 is not $1. And I use, you know, the illustration of the price of gas going up, the price of houses going up, the price of some food going up. Everything goes up over time when measured in dollars. Everything goes down over time when measured in Bitcoin, even in gold. All of these assets, the reason this chart right here looks like this is because it's being measured in dollars. Most of these companies in this S&P, there's 500 of them in there. Most of them are shit. Most of these companies are shit. But this index keeps going up because it's measured in dollars. And yeah, there are like 7 companies in here that weight the index, that drag it up. But these charts are up and to the right because the dollar buys less. You can pull up this chart, gold's chart, Bitcoin's chart. Why are they all up and to the right? It's because your dollars are being debased. They buy less. So this thing nominally and optically goes up over time. So to me, the smart thing to do is that money sitting in your savings account, you leave a little in there because you got to live. You probably got to have an emergency fund, whatever your decision making process is. But anything extra, you've got to put it in a real asset so it can do like this chart and you can maintain your buying power. And here's the other thing, as you think about this stuff and you get more comfortable with it, if you sit in dollars, you're going to lose purchasing power. If you put your money in something like the S&P, you're going to tread water. You're not going to make money. You got to put your stuff in something like Bitcoin. Faster horses is basically what I'm saying. All of these assets are going to move up, and you're going to be happy as long as you continue to measure your wealth in dollars. But once you move to the Bitcoin standard, and I'll show you what I'm talking about, or I will attempt to show you what I'm talking about. Everything is a pair. Everything. Same way y'all be comparing them currencies and trading them, everything is a pair. So what is Bitcoin doing in relationship to the dollar, to the NASDAQ, to the S&P, to Ethereum, to whatever asset? This is not the right chart. If you start looking at everything in pairs, then it becomes a little bit of a no-brainer. You kind of know where to put your money. So this is an Ethereum Bitcoin cross. And for a lot of time, ETH has been losing value to Bitcoin. So it would have been more advantageous just to hold Bitcoin. But right now, to me, it looks like, and I could be wrong because we could be getting faked out, but this looks to me like the chart is turning around. So I expect this to go up, maybe come back and retest and go higher. If and when that happens, it's going to be more advantageous to hold ETH over Bitcoin. They're both going to go up in dollar terms, but faster horses. So that's how I look at, the markets and different things, and why I make some of the decisions that I make, why I'm partial to crypto over, the shit that y'all do with the pairs and so on and so forth. That's why, because Bitcoin is the apex asset. And over time, it's going to eat everything. And it has. And right now, it's a unique time because if you're paying attention, you're seeing everybody knows about Michael Saylor pumping Bitcoin. I don't know if everybody knows, but BlackRock, Larry Fink, telling everybody to buy Bitcoin. This is Wall Street. They're telling you to buy the shit. You probably should listen. Now, Tom Lee and a lot of these guys are on there talking about Ethereum because of stable coins, and the reason that's important is because they're all going to run in and buy ETH and pump the price. And this chart, to me, suggests that that's probably going to happen here. I don't know, next 6 months to a year. So I'll be looking at ETH. We like to whine about, the bond market, and there not being buyers for bonds and the 10-year spiking and all that kind of crap. It doesn't matter if China doesn't want the bonds or Europe doesn't want the bonds or whoever doesn't want the bonds because they will direct the US banks to buy the bonds. And if needed, the Federal Reserve will buy those bonds to keep those yields down. So, and these stable
Hey,
coin
uh,
issuers,
uh,
huh?
do y'all know what a yield is? No.
Hold on, let me pull up the chart. Uh, it's over here somewhere.
Well, the 10-year. Just go 10-year.
Well, hold on, I have it. What I'm talking about is more important than the bullshit that you talk about every week. Calm down there, killer.
I would say not so much, but
Killer, calm down. We know you like to run your mouth. Uh,
the yield, basically
boom,
the
there.
yield is the interest rate or the interest.
Okay. Yeah, so this is a chart of the 10-year bond, the interest rate. When these charts spike, uh, it causes panics in the market, you know. So you want to see this chart come down. And if you notice, like if you go back to '07, the chart has been kind of steadily coming down. And I believe like 20 from 2016, I guess, to 2018, they rose. Coincidentally, that was a little bit of a bear market. Then they fell from 2018 to 2020. And they rose from 2020 to 2023.
And y'all got mad
So,
at Joe Biden for that.
right. So the point is, if as this chart comes down, the asset prices should do better. And I should say the Main Street asset prices. Like, has anyone noticed that the Dow Jones has kind of been trading funky for a while? Whereas the Dow and the Nasdaq and the S&P, they used to be pretty correlated, but the Dow seems to have broken correlation, over the last pretty decent amount of time. You know, um, to me, the reason that it has is because the Dow 30 has a bunch of companies in it that are more interest rate sensitive, whereas the S&P, which it has the Mag 7 in it, I believe, and the Nasdaq has a bunch of technology. Tech companies make more money. They don't care about interest rates because they don't borrow money or they borrow very little. So those companies perform in any environment, or at least in a high interest rate environment. Whereas your value stocks, those kind of plays, they won't perform until interest rates come down. So, but the 10-year is important because it's your gauge to all of the markets. Everything starts in the bond market. And once you understand that if when they buy bonds, it pushes these yields down, that's going to be good for the markets. When the bond market doesn't have buyers, it pushes these yields up and it usually triggers market sell-offs, market crashes, that kind of thing. So,
And the bonds, we keep saying bonds. That's somebody's buying the debt. That's what these bonds are. Bonds is just government debt.
right. And they have these bond auctions, and what they're basically people buy those bonds. That's how the government runs its debt up. They sell these bonds. People that have capital that they want to protect, they don't want to risk it. They buy the bonds because they're gonna. I mean, if you got $10 million and you can get 4% on your $10 million, that's probably attractive. You want to do that. If you got $10,000, who gives a fuck about 4%? So that's why some of you may have heard me say in the past that if you don't have any money, you should not be in bonds. You know, if you're a young person, you should not be in bonds. You know, you should be in equities, you should be in stocks. If you are a poor young person, you definitely should not be in bonds. But that's why, because the yield on the bond is going to be at 4%. So if the S&P averages, they say 8%, why would you be in a fucking bond? You know, and in good years, if the S&P is going to give you 25 to 30%, why would you be in bonds? If Bitcoin is going to give you on average 100%, why would you be in bonds? Why would you be in the S&P? So that's how I look at it and why I make some of the decisions that I make and why I say some of the things that I say. Are there any other questions? So everybody understands macro.
No, but that's all the understanding they get today. So
All right. So let me tie it back to Trump's big, beautiful bill. Let me tie it back to tariffs. So when they tell you that this shit is inflationary, and it is inflationary, then if it's inflationary, then the markets, they have to go higher because they have to go higher because there has to be money. There has to be money to pay the taxes. There has to be a paycheck to handle the inflation, for lack of a better term. You know, if it's gonna cost more to buy everything over here, these markets have to go higher. If something is inflationary, and here's a better way to think about it. If something is inflationary, it's your dollars buying less, your dollars being debased. So if something's inflationary, then real assets are going to nominally and optically, increase in value. So if when they sit here and they tell you that tariffs are inflationary, that the big beautiful bill is inflationary, you know, I'm putting my money in assets because they're going to go higher. And they're going to go higher, like I said, because they have to. And the reason they have to is because that debt keeps going higher. So, they have to go higher because they're the collateral for the debt, but they also have to go higher is because the people that make money in the stock market, when they're going to pay capital gains taxes. So if you're going to increase that debt, then the country's paycheck has to increase. There's a relationship, a ratio between the debt and the collateral or the markets. The markets can't go down and the debt goes up. Well, I guess they can. In theory, they can, but everybody's going to be living in dirt huts, basically, if that happens. And, the top 1%, they're not going to live in dirt huts. So they're going to pump the markets. They're going to go higher because they have to. So now does everyone understand macro?
no, Sean, but we'll study on our own. Lie.
So key things to pay attention to because you're not going to go study. I already know y'all. Key things to pay attention to kind of as you move forward. Right now, the debt is $37 trillion. Right now, we're in fiscal dominance. Right now, the debt to GDP ratio is, I don't know, 120 something percent. So if you notice that debt coming down significantly, my little keys and my code and my logic, it all has to be reevaluated. Because if the debt ever comes down, now we're not in fiscal dominance and they don't have to print money and push liquidity into the market the way that they've had to do since 2008. Now, in that world that I'm describing now, liquidity doesn't dominate everything. Interest rates become the number one dog on the totem pole. And liquidity is secondary. So as long as the debt rate is out of control and high, which I expect it to be for the foreseeable future, then the keys that I'm giving you will work. Why? Because they have to. There is no choice. There is no ifs, ands, and buts about it. I don't give a fuck what they get on CNBC and say. I don't care what happens that they try to fearmonger me with. What I'm telling you will work. And I'm going to give you one more case in point. Right here, this wick on this red candle. Look at the bottom of that. That thing says April 2020 or March 2020. That's the pandemic. We were in fiscal dominance then. We panic out of the markets. We take off, go to this high. We crash, we come up. What happens here? Liberation Day, this red wick right here. We explode out of there just like the pandemic. We're going higher, guys. Why are we going higher? To the young lady that's been interrupting me and asking me all these questions, why are we going higher?
Are you talking about me?
Yes. Yes. Why are we going higher?
Because we're in debt. You're talking about we're in debt $37 trillion. So
Right. But the answer I was
we
really
have
looking
to,
for, you're right. You're right. You gave the right answer. But the answer I was really looking for is because we have to. The
oh yeah, I
value,
wasn't finished. We're we're trying to balance everything out so that the focus could be the interest rates and not liquidity. Is that correct?
well, ideally, that's what the powers that be want, but that's not happening. The only thing that can make that happen relatively soon, probably in the 2030s, is the proliferation of artificial intelligence and robots. Because if they have AI doing everybody's job and then maybe a bunch of jobs that are out there that are theoretically unfilled, now productivity is way up. See what I'm saying? That's why I say it all goes back to that equation, GDP, population growth. Y'all don't want to have kids, we'll just make robots to replace your bodies. So population growth plus productivity growth. If I got a bunch of bodies and or robots, now my productivity is high, plus debt growth. So if my productivity is high, now my paychecks, my GDP is growing at a higher rate than my debt is growing. In that world, now interest rates drive everything. But as long as we're in a world where our debt exceeds our income, liquidity or the roll, the space on the credit card drives everything. And that's why right here, when we looked at these charts, 2021 all-time high, we break this high. ICT and my brother always talk about we break structure, we come back and we retest, and we go higher. So to me, once I saw that, I was pretty certain that we weren't coming down in here. We weren't coming back down in here to test, in part because of the debt. really in large part because of the debt. Because if we start coming back down in here, Houston, we got a problem. Because whatever the debt was here, it's a lot higher now. So these markets, that relationship that I keep talking about, it has to maintain that ratio. It has to expand. Uh, what does ICT talk about? The power of three. We have to expand.
Accumulation. Oh, I
Say
thought you were
again.
asking a question. I'm
Well,
sorry. I
I
thought you
kind
were
of
asking a
was.
question.
Yeah, I kind of
It,
was, but go ahead.
it's accumulation, manipulation, and distribution.
Right. I would argue this shit right here, this scamwick right here, was manipulation. But we have to expand now because the debt has expanded. From this high right here, whatever our debt was there, I don't know if it was 30 trillion, 32 trillion, whatever that number was right here, it's now at 37 trillion. So this market must expand and things must get overpriced in preparation for the next pullback or the next crash. This has
So
to
you're into.
expand, huh?
Sorry, I'll just raise my hand. Sorry.
No, no, go ahead. You're good.
No, I was saying, are you anticipating another like depression? I know we had a recession, but is that what you think is going to happen? Like
No, I don't.
with Roosevelt?
I don't. I don't think you can have one. I mean, if we allowed our markets to be free, you could have one. But our markets are not free. So as long as you have $37 trillion of debt, you can't have, to me, you really can't, Wall Street can't have a recession, not a long drawn out one. I mean, and if you go back here to this time frame, 2022, call it fourth quarter 2022, the chart shows you that the recession wasn't long. On the chart, on Wall Street, Main Street can have recessions. Wall Street can't, in my opinion. Because again, as long as the debt grows, the collateral, the S&P, it has to grow in relationship with the debt. So a depression would suggest, I don't know, a gazillion percentage point pullback, crash, right? Is the value of the debt crashing along with the market? Are we going to go from 37 trillion down to 20 trillion in debt overnight or within 6 or 8 months, along with the market devaluing? If your answer is no, then I would tell you that we probably can't have a recession or a depression. And any recession on these charts will be short-lived. This one, if you look at these charts, is short-lived. This COVID one, short-lived. Even if you go back to 2008 or whenever the last Great Recession was, it was short-lived because the market's gone up ever since then. And the reason they're short-lived is because of the debt. So once the debt ratio comes down in relationship to GDP, once that comes below 100%, I would say, then a lot of this fiscal dominance stuff and the factors that are associated with it, they likely go out the window, but not before then. But this Fibonacci right here suggests, and I can't believe it, but this is kind of mid-range. This is conservative. This shit suggests a $10,000 SV. So, I mean, we're probably gonna get there, man. I don't know. Uh, we're probably gonna get there. I mean, let's look at Bitcoin. I mean, some of these numbers seem very ridiculous. Uh, well, let me adjust this. I think that's wrong. Oh, it's wrong fit. My bad. 185 if we get to the 2.618. I think that shit is in the bag. It's a done deal. If we go to the 3.618, we're about 250. I think
I
we're
told
going.
you that a long time ago.
Well, I know you did,
This is
but
250.
we're going there. So what I would tell you is, I mean, you got to zoom out. Got to get you some digital assets. I mean, I guess we're looking at a $10,000 S&P. We're looking at a $250,000 Bitcoin, most likely. Um, we're going there. I just don't know. I don't know the time frame. Is this going to take 6 months to get to 188, 190? I don't know. Probably, but that's where we're headed. Don't be the schmuck that's sitting on the sidelines, losing all your money, in trades. Take some of your money, invest it, especially those of you guys that have kids. Maybe you're putting your kids' money in a 503B, or maybe some of y'all might have an IRA. Because I don't think you can do it in a 401k, but an IRA, you can pick what you put your shit in. Go find that Bitcoin ETF, IBIT, put your money in it. You can't spend the money for 20, 30, some of y'all 35 years anyway. What is Bitcoin going to be worth in 30 years? $10 million a coin? So even if you only had zero point 0.1 coins, if the whole coin is worth 10 million, what's a tenth of 10 million? A million? Instead of them putting your kids' money through them 503Bs or whatever the hell they're called, instead of them investing it in the S&P, tell them to put it in IBIT.
And you have to tell them because they're not going to do it.
Yeah. I mean, I told we got some money with Fisher, in an IRA.
He was punking you.
Huh?
You let that dude punk you for months. I remember that.
Yeah, he did. But I went back last August and told him to take $120,000 to thereabouts, put it in Bitcoin. Buy
What he
that
said,
IBIT.
I gotta warn you against that. Huh?
Yeah, that's what he told me. I
Or
told
you
him to
should
do it
call it.
anyway.
Did you call it? You should call him like tomorrow. Like, hey man.
I've already talked to him.
Oh, did you?
But yeah, the point is that investment's up 100%.
I know that, but that's that's why I would have called him. Like, hey man, remember me?
I've already talked to him
What did he say?
since then. We talked about it. Yeah, I don't. We've already had a call since then.
No, did
And
he
he
say
was like,
you're right?
great call on the Bitcoin. I was like, no shit. Had you done it when I asked you to do it, I would be up 200%, but you fucked me over, So, but anyway, the point here is, you know, everyone that's putting money away in these retirement vehicles, tell them to put the money in IBIT. Or if you're managing some of the stuff yourself, put the money in IBIT. Or if you got them kids' college funds, put the money in IBIT. It's going to outperform most stuff. And especially in those kind of accounts where I call it trapped money. You can't spend it anyway, without incurring a big penalty. So what do you care if Bitcoin runs up here to, you know, 250 and let's say it crashes back down here to 72? Who gives a shit? You can't spend the money anyway. You just buy it back at 72. And then it runs back up higher the next time.
I have another question, and you don't have to answer this today. Maybe this could just be another topic another time. But what do you feel about people who live off of dividends? Because I was looking into that,
Um,
but I just didn't know what you thought about it.
I think I think it's fine. Everybody's situation is a little different. The reason I've never tried it is because, and unless somebody can point me to a dividend paying stock or ETF or instrument, usually to for a dividend paying for someone to live off dividends, they usually have to have a big sum of money and it's sitting in that stock or that whatever. And the dividends, when you add them all together, they come out to a decent paycheck, if that makes sense. Like if you got 10 grand and you're in something that's paying, I don't know, $1 a share as a dividend, and maybe it pays that every quarter, and you've got, I don't know, 5,000 shares. That's going to be 5,000 bucks every quarter, which is pretty good, but you can't live your life on $5,000 a quarter. What does that break down to every month? Maybe if you ran to Thailand or Zimbabwe or, someplace where, the cost of living is dirt cheap, maybe you could. But the point I'm trying to make here is, it's fine if you have enough money to make the payout, worth it. I hope that makes sense.
Yes. I totally understand what you're talking about because some things that I've read or watched, they said that you need like about 100,000 to maybe make 12K a year. But then there were some people who were saying that you don't need as much. So I didn't know if that was something that you were vested in. So I asked.
I'm not, and I think the person that told you 100K to make 12K a year, they're probably closer to correct. I don't know every stock that pays out a dividend, so maybe there is one out there that pays more to where if you had 100K, you would make a lot more than 12K a year. But I think that analogy is closer to correct for most dividend paying instruments out there. So again, what does it cost to live your life? And will this payout fund it? And I think for most people, the answer is no. So, and here's my other personal thoughts on it. If Bitcoin, and I'm going to use Bitcoin, and there are other things out there. If Bitcoin is returning on average 100% a year, I don't want to be in that dividend paying stock. I'd rather make 100% a year. You see what I'm saying?
Hmm. Yeah.
So, and that's really like when I talk about pairs and I talk about faster horses, that's kind of what I'm talking about. What is the average annual growth rate of the S&P? What's the average annual growth rate of the NASDAQ, of the Dow Jones, of your dividend paying stock, whichever one it might be, of Bitcoin, of Solana, of whatever? And I'm usually going to try to steer myself into the one that pays out, that grows the most on average. Now, past performance doesn't guarantee future performance, but for something like Bitcoin, and again, we looked at the market cap of the entire space, and we can do it this way too. If the market cap of the entire space is $3.5 trillion, and we think it's going to 100 trillion, I'd rather be in Bitcoin. So this total chart tells you that the market cap is $3.6 trillion. And total means all of crypto. So as you look at this crypto chart, even it suggests that, we're going to $5 trillion. Maybe we're going to 8 trillion. Dare I say 11 trillion is possible? But this is how I look at these things. And this is what I mean about marrying the macro to the technical. This chart is suggesting that we're going up here on this chart. I might look at this just through a technical lens and say, hey, man, that's kind of ridiculous. I don't know about that. But then I look at what's going on with BlackRock. I look at Michael Saylor. I look at Tom Lee and Ethereum being all over CNBC every day here lately. Now, these numbers maybe don't seem so ridiculous. I look at the big, beautiful bill. I look at the Genius Act, the Stablecoin Act. I look at Trump talking about a Bitcoin strategic reserve. I look at all these fundamental things that are going on in the macro, and I look at this technical chart, and these numbers don't seem so ridiculous. But if the space is going from 3 trillion to 100 trillion, then Bitcoin is likely to continue to grow, maybe not at 100% a year, but, does it come down to 50? Where else are you growing at 50% a year? Nowhere. So that's just how I look at it. So yeah, this dividend stock might be paying me whatever it might be paying me, and I might look at that as being great, but if I'm taking that dividend and spending it, I mean, what is is my money, is the principal of my money that's generating that dividend, what rate is that principal growing at? And could I make that dividend just by putting that money in? I keep using Bitcoin as the example, but if Bitcoin grows at 100% and that dividend payout is, you name the number, do I make that just by having the money in Bitcoin? Probably I do. So I just would rather be in the faster horse. For you guys that are interested in altcoins, when alt season, this is the altcoin chart. Are the altcoins going to go to be worth $4 trillion? I don't know. I hope they do. Do we get to 2 trillion? I mean, probably we do. I mean, that's a pretty conservative place on the chart. Do we
What
get
coin did you say, sir? I'm sorry, I'm going to write it down. What coin did you say?
I'm talking about altcoins. Just Altcoins are all the coins, like the total three chart are all the coins minus Bitcoin and Ethereum. So all of them, this is their value, this $915 billion. So I'm not talking about a singular coin. I'm talking about all of those coins combined, their combined market cap, where it's likely headed.
Oh, is it kind of like an index kind of
Yeah,
how it's
yeah,
a
yeah.
okay.
You can't,
Oh,
I don't think you can buy the index or trade it, but it's a way to look at it, you know.
okay, thank you.
You're welcome. So anyway, that's all I got, unless somebody has more specific questions. I mean, I gave y'all the quote unquote influencers that I pay attention and listen to. I mean, we talked about market caps and where we think the space is going. We talked about macro. So unless there are any more specific questions, I'm done. So I'm gonna stop sharing my screen.
All righty then.
Thank you.
You're welcome.
All right. Wow. So that's like 2 hours.
Hey, I hear you, but it's
That's
important.
it's all
It's
good.
important.
Hey, Doug, maybe you could do a crypto thing every now and then, but like maybe every other week or whatever. Now, maybe I don't have to do a trading thing.
Yeah, I can.
Todd, don't say
'Cause,
yeah, and then
That was good though because I learned a lot.
then like 2 weeks later, you be
oh,
like, ah, man, I didn't know, man.
I say what?
Don't say you can do it. Then and the next time, like 2 weeks from now, you be like, oh man, I didn't know.
Oh, so am I definitely? You saying maybe? I mean, so
But if you can do it, Todd, you can do it because I'm in a big, beautiful trade right now.
what's the big beautiful trade?
It's gonna last. I thought you'd never asked, huh? But
This looked like the altcoin chart that I just showed.
well, this is going down now. So the altcoin chart look like this, you in trouble. You see this big, beautiful trade right here?
Like sell.
Sell like a sell. Like if you just sold this pullback, you could be in this big, beautiful trade. This is EuroCAD. It's 800 and some pips, but I think it's about 1,000 pip if you go in there and you find the imbalance. Um, is anybody in EuroCAD? I want to go over like 3 or 4 trades. So I
I'm
know.
in EuroCAD, Todd.
Okay,
Same.
let's rap about this EuroCAD. Um, I'm assuming you got in when you first should have, and I like the where we are. So I'm anticipating that Sunday, Monday, we're gonna start pushing down. I know it's been um crappy, like the price action, but that's what I talked about coming into the week. I use the line chart, so this would be my break point for this particular trade, where I want to see this trade break this low right here, body closure below that low. I think we'll get it early next week. But once you get the body closure below that low, if I were you, I would just mark my chart, right? Mark your daily swing low, because that's what you're looking for the body closure of the trade below that chart. Once you get that body closure, you can unclench, and you're about to make some money, because what you'll need to see after that is a pullback, right? So basically, you'll be looking for your pair to give you a body closure pullback where you can add, you can add another position for that descent down into the banana zone to pay you, right? And I'm assuming you already have your target. I did a little video on that. Your target is likely going to be down in this range here. That'll be that 6-month pullback. At this point, once you get that body closure beyond that day, just go mark your next swing low, and you just monitor it on your way down there. Any questions on that?
Nope.
Yeah, I got in at 605 now too. You think it'll run through my entry?
605?
Yeah.
No. 1605 up here?
That's 605.92.
You're
Yeah.
good. Yeah, I mean, I don't think it's going to come way back up there. I think you're good. The structure on this trade, providing that we get that closure, and I think we're going to get it, the first or the second day of next week, is going to be on or popping. You need the daily candle to close below that low. It might push down a little bit further, but once you get that pullback, you add number 2, and then you take it to these lows, and you'll be good. That's a lot of pips in between in between these two levels too. 204 pips. So you'll be able to make a ton of money between these two levels. And what might happen, this might just run down these 200 pips and close below this second one anyway before it pulls back. So you just have to play it by ear. But the most important thing is you got that first entry and you got it at a pretty decent level. So now you just be patient and wait. The hardest part about these long range trades is the wait and see type situation. All right, Euro USD is a similar setup. We hit that first 100 pips. This is my least favorite structure wise, but I told y'all that it was going to be rough getting through this imbalance. I think the most important thing for me is that we closed still with the bearish imbalance, which gave me a greater deal of confidence. It might play, a little bit more, but I expect for the price to keep pushing to the downside. GU has a lot better price action on it for whatever reason, but it is what it is. If you're in EU, just hold your Cheerios, man. Like to me, you got everything that you wanted still out of this pair, right? Because what I wanted was for price to get through this zone. And for me, once we got through that zone, the pucker factor was a lot less. So I expect, maybe a small pullback to keep pushing down. Even if we pull back a little bit deeper, which I don't really see a need because we pulled back up here one time already. Well, it looks like we pulled back Friday too. So I expect this to start pushing further down. So maybe we get another retest, maybe not. But I expect again, like Sunday, Monday, for us to start our descent into our banana zone on this one too. If you got in here, I mean, to me, this gave you ample opportunity to enter. I know some people were even looking to get out of that get out of that trade before it even started. All right. Any questions on this trade? Is anybody holding these? Is anybody in GU? All right. So for GU, it's approaching the zone that it's going to bounce, right? We're going to get a bounce from here. So you're going to get some crappy price action this week if you're in the GU trade. But it gives, this is poetic justice because you had a good week, easy week last week where you got a better push, but now you're pushing into a demand zone, right? So you're going to get a bounce. Maybe we just push, maybe the market opens and pushes you straight into the zone, and then you get a pullback for a day or two to close this imbalance. And then maybe around this zone, I would expect for it to turn to start pushing down. This price action that I told you was going to be crappy through here wasn't as crappy as the EU price action. So maybe this price action to push through here to break this daily swing low, maybe that won't be as dramatic either. I know there are some of y'all, some of you buyers are looking at this as just a pullback to go north. But so we'll see, right? This is the daily swing low. So you're looking for a body closure below this daily swing low. If you get that body closure, then you can unclench, you can breathe easy, and you'll probably get a pullback to go lower, right? And we have a whole bunch of targets to get to this next level. Any questions on GU? Okay, I only got two more trades that I want to kind of talk about. I know we've been on here a long time. That Chef JPY. This is the only JPY trade that I like. Okay, we know that Chef JPY made a new high, right? And what I was saying is this line right here is my 6-month candle high, right? And if I pull up that 6-month chart, Chef JPY is way north of that candle. So eventually this is going to turn around and it's going to sell back down to your golden zone. I think it's going to sell with the rest of the JPYs. I think they're going to sell as a basket. But when they do start selling, because of the structure on this one, this will be the trade that I'll be most interested in. And what I was saying is because the price is so high above the 6-month candle that you don't have to worry about trying to be the first one in the trade, right? You can wait for this to give you a full change of character on the daily, right? So when I mentioned that the other day, the change of character to me would have been the break of this low, right? And now, because we've established another pullback and went higher, a change of character would be a break of this low. So I don't think we should be rushing. Maybe you can mark this up on your chart, put you an alert or whatever at these levels. You don't have to watch it, and you don't necessarily have to participate in the price action to the north, right? You really don't have a place to compare this to on the left because you're at all-time highs over here. So I wouldn't suggest buying at the high. There's a pullback, and you want to buy, do it at your own risk. But I think there are better trade setups that you can take while you wait for this trade to turn around. If you weren't in this trade back down here, then I would just not chase it. And this is only useful to me when it turns and it gives me a change of character on the daily, because then I have a nice 1,000 pip trade. Just from here to my golden zone is 932. And if there's areas of interest in my golden zone, the pip count gets ridiculous. So this is a trade that I would keep on my watch list. And just, line your alerts at these lows. You don't have to do nothing. You just wait. Your alert is going to tell you when the price action changes. Once the price action changes, then you have an easy setup. This will be a low maintenance trade as it pushes down. And my trade, I got this trade from Tuesday. Right? Somebody asked me about this trade Tuesday, the EA trade. And I saw EA when I looked at all these pair at the last uh at the 6 month, but it had a lot of wick on it, right? So it wasn't a trade that I wanted to play with because we had a lot easier setups. And then on this monthly chart, I saw that we came up and we wicked that high, and I knew that we were going to turn and burn. Somebody asked me uh, to look at this trade on the Tuesday call, and then when I looked at it, I'm like, man, that thing is about to roll. It's about to sell, and it turned and burned. I want to say Thursday from Tuesday, like from Tuesday, from Tuesday that there is Tuesday night that trade turned and burned, and it broke structure, right? So to me, it created a great trade setup. Like so, 3 week candle close and is a liquidity grabber, right? I know it's all part of this inside bar, but what happened during this inside bar, right? We established liquidity. We took a low down here, then we came up. Now we took the high, right? So we've taken liquidity from the bottom, then we came and took liquidity from the top. I definitely believe that we're headed down to this imbalance, right? There's nothing else to play with. The highs and the lows have been manipulated. People have been taken out the box. So now I would look at this 700 to 800 pip sell down. That's just without me looking even in here. If it closes at imbalance, you get a lot more. But this to me is it's a great setup now. Now that the time has transpired. If you go down to the weekly, I believe you got the bearish weekly OB, right? So you got this push down, then you got the pullback to let you in the trade, and now it should be off to the races down into this imbalance. And just by looking at this 1 week chart, I believe we should come down to these, at least to these highs, because this is where your ICT order block is. So, he would suggest that this trade needs to hit the top of this order block at least. So just from this setup, right, it's going to buy up a little bit. Let's just go from this imbalance to this imbalance. That's 1,084 pips. You either believe it, or you don't. But that's the trade setup. You got a weekly bearish OB. It needs to pull back. When I looked at the daily chart, you got a daily bearish OB. And it kind of trickled up on Friday. So I anticipate this trade pulling back and then dropping out the park. Okay. I know GA dropped last week too, but to me, this setup is I don't know. It's better, or I like it. I like it better. So is there any questions over any of those trades?
I don't have any questions. Can I share my chart
Sure,
for some feedback?
sure, sure, sure.
So US 30 has been like ranging. There's a lot of news that's coming um next week. So I'm looking for price to break this range. So a lot of the lines that I have is just key levels, and I'm looking to see what price is going to do at these key levels. I know sometimes my chart is hard to understand for some people, so I'm trying to break this down. So this is Monday's low. You can see so what I'm looking for is some kind of retracement. Um, so I go to the 4 hour, or is it a daily? No, it's the daily. So price broke structure here. There's a break of structure. Sorry. There's a break of structure here. So I'm looking for price to either grab Monday's low or I'm looking for some kind of reversal here. But because there's like CPI and stuff like that, price could very well go into this imbalance here and break this previous week's low, come here and buy up, or it can come and hit one of these areas here. That's the daily golden zone for, well, that's for the daily order block, or yeah, for that's the daily and that's the weekly. So these are just my areas that I'm looking at,
Can you go to the
and I'll just have to the what?
three
The
week?
three.
Just
I
type
don't even
3W,
have the.
3W, 3W, three. Just type it 3W.
I gotta pay my subscription.
Okay, so go to the 1 week.
Oh, I don't even have it.
Go to the 1 week. Okay, inside bar at your area of resistance. You see the inside bar?
Yeah. Yes, sir.
So maybe we manipulate those high. Maybe price goes right up there to that Monday's high before we start selling. I don't
So
know.
you're saying this right? So the previous week high, or so that was another thing I was looking at too. That's why I had this marked. I wasn't sure if price was gonna come hit
It might.
this
I mean,
or
I don't know
this.
for sure, but I think that we're pulling back at least, right? I think that the market needs to push down, but it gave you an inside bar. So that's consolidation or a change of direction. Uh, and if you believe, it doesn't matter what we believe. We'll see. Something has to be manipulated. So maybe price will push up to those highs first to go lower, or they'll push to the lows first to go high.
So you think it'll break the previous week high or it'll break Monday's high? Or you're just not
Well,
sure?
I don't know. I mean, it can do either. It can do both. I think we have to wait to see. This is a weekly chart, so it's possible that we'll get a whole week of price action before we know for sure what went down. Now this just takes off and buys tomorrow or whatever, and it goes up to those highs, or it gets closer to those highs than it is to the low, then to me, the way I look at the charts, it would tell me that it's going to manipulate the highs before going lower. When is the CPI news? Tuesday?
Yeah, we got CPI, we have PPI, so
But was Tuesday is CPI?
sorry, that's July 9th. Hold on a second, let me let me just go to my phone. I just had it. I was just looking at my FX book. So people darn. On the 17th is
Thursday.
CPI. No, PPI is on July 16th.
Tuesday is
And then July 15th
no
is
Tuesday. CPI.
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 Yeah,
Yeah.
Tuesday is CPI.
Yeah.
And then Wednesday is PPI.
Yeah. And I think traditionally CPI has a bigger effect. I think.
It does.
So
CPI has a bigger effect than PPI.
yeah,
And then
I
we
would
have
look.
something, huh?
I would look to see where we're at prior to that news release. To me, it'd be interesting if we are at the top or at the bottom of this range.
Yeah, I just don't like this right now. Like I said, like I feel like all of this is just consolidation. What I do see here, I used to call it like the fishing pole. Um, that's what I would call it. But I feel like all this liquidity is going to get ran. If I look at it from like a larger perspective,
It looked
and
like
I
they
could
ran the
see
bottom already.
price. Hmm.
You look like they ran the bottom, that internal liquidity from the bottom.
You talking about right here?
Yeah.
Yeah, and see, that's what I'm trying to like look at the higher time frames, like you're saying. But that was kind of interesting for me because on the daily, was it the daily? Yeah.
You
On
got a
the
bearish
daily,
OB.
it's like price, yeah, broke structure. So you're like, okay, it's gonna buy. But then on the 4 hour, price already broke structure here and bought up. So I don't know.
But
I
that
just,
tells you to me, the daily, you got a daily bearish OB, which means price needs to buy back up into your zone at least. You don't look at it like that.
yeah.
Look at your daily again. You got a bearish OB. You have your daily golden zone marked. So don't you expect price to buy into your zone? Like it needs to go back to premium before it sells, right?
Yes, sir. That's why I have this. That's why I said, like, I know the chart looks a little interesting, but these are just the different areas. And I know some of them are kind of far away, but the volume that US 30 has, I wouldn't be surprised if price came here or if
Hey,
it,
well, I
I
see
just
people
have
say
these,
that's your religion. It's all good.
that's my what?
All that graffiti on your chart is your religion.
Don't do me like that. I don't have that much on there.
Right. It is what it is. If it makes sense to you, then that's all that matters.
I mean, but do you understand, or
Yeah,
does it
I
just not
do.
make
I
sense?
listen. I understand those levels. I'm just saying. Um, I like to wait to see what price is going to do first. So you already have a daily bearish OB. Either price is going to push down and take one of those lows before buying up to your zone, or maybe it just heads to your zone. But in my opinion, there are going to be great trade setups around that news event anyway. So I don't necessarily have to trade uh, before that news event unless it's a give me move. You know what I'm saying?
Yes, sir.
I just feel like you you can wait and take advantage of the obvious, when it gives it to you. You don't have to necessarily guess. You have the markings on your chart. You understand where your highs are, where your lows are. Like I see what we have. We got a lot of consolidation, which led to that inside bar. So all I'm paying attention to is what gets manipulated, either the high or the low, right? Uh, I highly doubt that we're just going to go out one end and keep going. So
Okay.
we'll see. But I think, as long as you have the markups and they make sense to you, then you can sit on your hands until the market makes itself obvious. It's got to come to you. Did you
Yes,
mark the
sir.
NASDAQ up too?
How you know I did?
Well, let's see it. Let's see it.
I mean, I didn't have as much markings
Come on,
though.
man.
I really just had
To
one.
me, the NASDAQ is a better trade. At least that's what
I really just, yeah, I really was looking for price to buy because there was a break of structure here, and so I'm
the
looking
price
for a
to sell,
pullback.
man. How you looking for it to buy? Why? Based on what?
Wait, where is my actual? Where is it? I did mark this up. Mm, So I'm looking to see if there's. I think I saw a break of structure like I did the on US 30. What was it? The daily. But eventually I feel like it's gonna sell. But I
Yeah.
did see this, so I was looking for a pullback. But I mean that pullback is gonna be brief. But I mean, I don't know.
But you
What do
said
you
buy.
think?
You said you was.
Yeah, I mean, I feel like it's gonna buy briefly and then it's gonna sell. Really, I'm waiting for price to really get up here. I want price to break this all-time high right here.
Well, but you see,
And
it took that liquidity, right? You see the liquidity graph. Is this the daily chart? You see that liquidity?
Yep. Yeah, it did take it.
So to me, after the liquidity grab, we haven't broken any low, right? Is there any low that we've been broken?
Well, we right here.
No,
But
but
yeah, we didn't break it, so that's true.
we didn't break no low. So for me, this is the low that was there before the liquidity grab.
Hmm.
So I'm saying we're gonna at least go in there, at least. But go to a higher time frame. Look at the 3 week chart. Oh, you can't. Look at the 1 week chart.
Okay.
Whew, yeah, man. Come on, bruh. All right, scroll down. Let me see. Let me get that. Like, bring up more canvas. Make it smaller so I can see where the imbalance is. I guess that where you got that the previous week low. To me,
Yes.
yeah, that's what I think. I think we're gonna come down.
Okay.
Now I don't know, because I haven't looked in here to see what's in there, but um, that's what this suggests. We wick that wick and close below it. On the daily, we need to push down. So I'm just going to expect to go into that imbalance.
Okay. Well, I'll be looking for that next week. Like I said, I'm trying to control my exposure to the markets. So I really just been looking at one or two. I was trying to follow EU because I know y'all been talking about that. So I've been trying to look at EU.
Did you mark your daily swing low on EU?
I did not. I did not.
Well, I think that's the important piece, right? Because um, you got to wait for price to close below that daily swing low.
Right here. Let me mark it right now. So I need price to close here.
No, that's
So to grab
slow
the
down.
previous
You
week
gotta
low.
you're too zoomed in. You gotta zoom out. But bring this down more. Okay. Now squeeze it in. Squeeze the chart in too. So you can see. Okay, so if you were drawing your structure on this chart,
Mm-hmm.
how would your structure look? Like where would be your daily. Okay, so if that's your daily swing, then you have to draw your line at the bottom of that swing point, right?
Oh shoot. I didn't
So
do that. Yeah.
that's where
I
you
thought you were talking about up here.
well, it's no swing up there. Like we're just pulling back. So technically, price could pull back and go higher, right? You have to
Mhm.
monitor your trade based on the structure, right? So if you want to trade this daily, then you got to mark your daily swing low, right? You got to know where you are in price to get to that swing low. There's 4 hour swing lows, 1 hour swing lows, all that stuff. So what I was saying was we got through that 4 hour point. You mark your daily because that's your next objective. You have to understand that price will probably pick up a little speed through here until you get to this imbalance, right? And that imbalance coincides with a demand zone if you trade supply and demand. So your next bump is probably going to be right here. Just how high is this bump going to take you? And are we going to turn and eventually get through here? Or do you need to cut this trade off because it picked up steam and it's blowing out the top?
Got you. Let me just put a line here.
that goes for any of those long range trade like EC, GU, EU. You just mark your swing points and you monitor that trade when it gets down to your area.
Okay. That's all I have. Oh yeah, I forgot. I do have something for the S&P. And I only was looking at it because I wanted to see if there was any divergence. But
You got
I
your
might
divergence.
trade this. Hmm?
You got your divergence
I
at the end of the month.
hold on a second. Where is it? Where is it?
This
It
looks
is
very
on
familiar. Look like the Nasdaq chart.
hold on a second. I'm about to show you. Is it on the 4 hour? Okay, there's a gap in price. So I'm looking for price to fill this gap and then I want to sell it. If I move this out the way, you can see what I'm saying.
No, I see the gap.
I'm look I'm looking for price to come and buy into this and then I would sell it. I don't trade S&P like that, but I just happen to look at it and I feel like that was a good opportunity.
I think it is too. I don't trade S&P either, but the SPIX. Does anybody trade S&P? Your boy ICT trades the Standard and Poor's. My pops traded Standard and Poor's.
Your dad trades S&P?
Yep. My
Yeah,
dad will put
that
a
was it.
he'll put an MACD
Huh?
in the chart and run it up.
Oh, I don't know how to use a
Me either.
MACD.
I don't either.
Sorry.
All right. Does anybody have any questions? No questions. Hey, Sham,
Yeah.
how you doing?
Okay.
I ain't seen my boy in a minute.
Right. He's on call right now. He's at the hospital.
What up, Dylan?
No, he's on call for work.
Oh, he's on
He's at
call. Okay.
He's at the hospital since early this morning.
That's unfortunate.
He's
Yeah,
been doing a contract, so
yeah, I
he's been
know.
working.
He's in New Orleans.
Yeah.
Okay. Um,
I try to keep him in the loop.
have you looked at USD Mexican?
I looked at it, I want to say last week.
Yeah, it kind of kept falling, but now that the dollar is strengthening, um, maybe it will run up there before and give us an entry opportunity before we fall off the cliff.
Right. I've been waiting, what, like 6 months?
Yeah, but I kind of felt bad because it didn't pull back. I like, yeah, I remember you asking me about it.
hmm
Like, no,
I
I'm
had all
waiting.
my alerts ready.
Yeah, it just never pulled back. It's unbelievable. But it is what it is. If we get a small pullback, I'm gonna have to try to get in because uh it's ridiculous at the rate that it started falling.
Right.
We'll have to see though.
Right. Yeah, I'm waiting. I'll set a little mini alert again.
Yeah, I got my alert set too. We'll see. We'll see if it gives us an opportunity because it would be a really good trade. All right. Is there anybody else that has anything or anybody looking at anything else? All right, y'all. See y'all in the market streets.
Thank you.